Hi, good evening everyone. This is David from DH Trader. Today is Friday the 7th of November. Markets are now closed and we are going to do an update on the DAX due to recent events. Well, first of all, many people are wondering and asking themselves, well, what is the trend on the DAX? Which direction are we going? There's a lot of uncertainty. A lot of people are saying that the bears are in power. Others are saying that it's the bulls. There's a lot of uncertainty, and I think that certain points need to be clarified. So, in instance, I'm going to try and illustrate on the screen right now what the situation is as such with the DAX. Now, the DAX has been coming, we've got the weekly chart on the screens right now. Now, this is a weekly chart that every candle represents a week, and therefore we're going back since July 2012. And you can basically see what the situation is with the trend on the weekly chart. We've got an upwards trend on the weekly chart that is dying out, that is losing momentum, and on top of that, you can actually see that the bottom bit of this weekly trend has been broken. It was broken on the 15th of October. So as such, this invalidates the current upwards movement and tells us that we're going to start a lower movement in the coming weeks, as this is a weekly chart. If we have a look at the daily chart, well, the daily chart is pretty clear. A lot of people are saying that we're in an upwards trend, that the DAX is going to reach new highs, we're going to go over to the 10,000 levels again. If we have a look at this, this says otherwise. This is clearly stating that we're in a downwards movement. You can actually see with the channels that have been put and the trend lines that we are in a downwards trend as such. Obviously, a trend is formed by several movements. We never go up and down in a straight line. As you can see here, this was downwards movement. We went back up here. Obviously, on a smaller time scale chart here, we would have identified that this is an upwards movement, so upwards trend. As soon as this is broken, if we draw a trend line, as soon as this is broken, here we've got a trend line. Well, basically, this was our signal that this upward movement is coming to an end. We broke the trend line, we kissed it goodbye, and bang, we went to the downside. Now, this is something that we could do here at this instance too. Now, the trend line that we've got, if we have a look, seems to have been broken today. This is what it's telling us. So here we've got our very first indication that the upwards trend line that we've been seeing on this movement since the 15th of October may come to an end due to the break today. That doesn't mean that tomorrow, not tomorrow, but Monday and next week we'll be going definitely down in one go. We're not. We might just go and test it again and then come down finally. So this is for the trend line. If we have a look at our study, this is our chart to just put one without the pivot points. So this is our chart, daily chart, to have a bit of a better look, understanding of what has happened. Now, if you remember, in a previous video that I did, I'd informed you that I clearly saw a figure here, which is the head and shoulders figure. Now, for those of you who aren't familiar with this, I'm just going to illustrate what a head and shoulder figure is. When you've got upwards movement, as you know, you never have an up and down movement in one go. It kind of goes like this, as I was explaining to you. This is the Elliott wave theory. We have wave 1 here, we have wave 2, we have wave 3, wave 4, and then we finish with wave 5. Now this is basically what the Elliott wave theory states. Now, a head and shoulders pattern is basically a pattern where you form a top, you actually go higher, so this is the head, and then we basically form another shoulder. This is the head and shoulders pattern. As such, a head and shoulders pattern is formed when we finish the first instance of the Elliott wave count, and we're starting a new Elliott wave count in the opposite direction. If you have a look, as I said, we've got, sorry about that, we have wave 1, wave 2, 3, 4, and we're now with wave 5. Now at this instance we finished wave 1, wave 2, wave 3, sorry about the writing, wave 4, and wave 5. Now here we've basically formed the top and we've ended the wave 5, and therefore we could see trend reversal. Now when trend reversal happens, we actually go down, and we do the exact same Elliott wave theory in the opposite direction, where we have wave 1, wave 2, wave 3, wave 4, and wave 5. Now, this area here is the figure that we're interested in. This here is the head and shoulders figure. Now, head and shoulders basically states that when you've got this chart of a head and shoulders figure, and it's confirmed here, what we've got is what we call the neckline. Now, this line here is the neckline as such. If this neckline is broken and we close below it, then expect to have to aim a low that represents the distance between the neckline and the top of the head. So it's basically telling you that if this is the equivalent of 2,000 points on the DAX, for example, then expect a downwards movement here. I've lost my mouse. Expect a downwards movement here of 2,000 points. This is what the head and shoulders figure basically tells you. So if we have a look at our chart here, you can actually see that we formed the first shoulder here, we've got the head here, and then the second shoulder here without going above the head. Now, if we draw the neckline, it's a bit high. The neckline is basically there. We broke this neckline there, and this is indicating us that we should have a movement that will take us down to, if we are there to the neckline, we're looking at 9,521. So the area that we would be aiming due to this head and shoulders figure would be the 8,150 area roughly. So 8,150 area, we're looking basically the area there, which represents some kind of support nicely at this area. So this is the aim for this head and shoulders pattern, an aim that we have not yet reached. Now, it was a bit surprising, it's true, at this point that we retested this support that was broken, a weekly support broken, and we actually went above it. Now, this invalidates in a way this break, but this could be a false breakout. I do personally believe it is a false breakout. If we have a look at the daily chart, if you remember on the trend identifier chart that I put for you, I clearly stated that we are in a downwards movement, as you could remember with the downward trend line here, and therefore any break above this area, I mean, if we were to reach this and not bounce back and break above it, then we'd have to reanalyze this, as it would be obvious that the DAX would be heading to higher highs. We'd have broken this trend line there, and we would be going for that. Nevertheless, this is very, very unlikely in my opinion to happen. I do believe that we will be heading down, and quite sooner than expected. It would have been a possibility to go and test it, to go and touch it, so reach the 9,600 area. But I don't think that we will be doing that. I do believe we will be going down earlier still. Now, a lot of people will ask why. Well, we better zoom in to our charts to see what has happened. Now, at this stage, I'll just delete these lines so that they don't bother us. At this stage, we have something very important here that has formed, and something. This is the movement from the 15th of October that we've had. Now, if you notice, I mean, the Dow theory says in a trend, in order to identify if it's upwards or downwards, we do higher highs and higher lows. This is a high trend. Lower highs and lower lows, we're in a downwards trend. Now here, we've been doing higher highs, higher lows, all the way up to where we are now. Now, if you have a look at what's happened on the stochastics, well, the stochastics have followed basically our higher highs and higher lows right until the high that we did today. Today, 6th of November at 1 o'clock, we created a high, and at this stage, the stochastics did not follow. We had a clear and very strong divergence on this, which indicated weakness in the upwards movement and most probably trend reversal. So in the case of a downwards, in a bearish divergence, sorry, there are several factors to have a look at. Now, a bearish divergence states, normally, if we draw a Fibonacci retracement, I'll just put that in black for you so that you can clearly see it. This is a Fibonacci retracement now. It tells us, well, the first thing to know about a bearish divergence, if we close below the middle Bollinger Bands, so this is the moving average 20, then aim for the other side of the Bollinger Bands. This is the first thing that a bearish divergence tells us. The second thing that we know about a bearish divergence is that if we actually reach the 23.6% Fibonacci retracement, then there is a very, or not to say extremely high probability that we'll be going down for the 38.2 level minimum. So if you have a look at what's going on now, we're basically told that we've broken the moving average 20, and therefore we're going to aim for the other side of Bollinger's, and this is going to take us below the 23.6% retracement of Fibonacci, which will take us all the way down to this level here, which is the 38.2 at 9,040 region roughly. So this is in a way a kind of an immediate action that will be taken, I do believe, during next week, or possibly the next couple of weeks. So expect a downwards movement to the 9,040. This will put an end to this pullback that we've had here, and this is the reason why I do not believe that we will be aiming for the 9,600 trend line here. This is where it comes to an end, I think. Now let's have a look in a bit of a closer scale. Here we are on the hourly chart. Now I'll just get rid of the Fibonacci retracement. Now the hourly chart, as you know, we had a bit of a gap here. This gap was closed, we went back up. Now today was an interesting trading day. On the 30-minute chart, we've had a very clear charting figure, which is the Adam and Eve. Now once again, if you're not familiar with Adam and Eve, well, what is this chart? Well, Adam and Eve says if you get an upwards movement and you reach a point where this movement goes like this, then it's telling you this is an Adam and Eve retracement, which is the first high that was done, Adam, the second Eve. Don't ask me why they call it this. I mean, there might be some kind of explanation, but I mean, I'm not aware what it is. But this figure is basically telling us that once again here we have got a neckline. If this neckline is broken, then the distance between the top and the neckline here, well, this distance becomes our objective to the downside here. This is the Adam and Eve theory on the charts. Now here, for those of you who haven't seen it, well, this is clearly what we've got. We've got an Adam and Eve that's got a neckline at this instance there. The neckline, well, it's withheld. I mean, at this point here, many people would have thought that's it, we've broken it, but no, it withheld. The candles are not closed below it until this point here, where candle actually closed below it and was indicating that, well, we're heading for the distance between the top, and this is basically what we got an hour later, as this is the 30-minute chart and two candles went by. Now this signal I gave on eToro, I believe some of you took it. For those who did, congratulations, because I mean you had a nice decent 80 points here to take, so well done. And now, well, what have we got? Well, we're basically forming a little bullish divergence here at this stage, which should take us up a bit, possibly retrace us up to this neckline there at the 9,340, 9,350 level, and then eventually to continue on our way down. So, well, quite a bit of information I've given here for you. This is the technical analysis side of it, telling you that everything is pointing to a downwards movement. Nevertheless, as I mentioned to you, there are many websites, as you can see now. This is investing.com. They're recommending strong buy on the DAX. FX Empire, they're also recommending a buy on the DAX. IG is saying that we've got an upside momentum that remains strong. I mean, I totally disagree with this. Many of you will wonder, why? Well, I've just given you a lot of examples based on the technical analysis side of things. Now, there are other things to take into consideration that a lot of people tend not to, and that's the fundamental analysis. Now, fundamental analysis is important. I don't believe that it is the most important, but it is important. Many of you will remember when we were trading back the DAX. I'll just put the daily chart back here. Well, here we had quite an important drop, I believe, at this point. Let's have a look. Here, well, these drops there, I mean, they were kind of pointed out with the Russia-Ukraine crisis. The Ukrainian Prime Minister came out quite a few times saying that, well, the Russian troops had invaded Ukraine and were entering into Ukrainian territory. As soon as this happens, obviously, well, I mean, the war within the EU zone, I mean, this is something drastic for the economy, and therefore, what happened? Well, simply caused a crash on the indices. Now, something happened today and had absolutely no effect as such on the markets. Well, Ukraine is accusing Russia again of sending tanks. This is escalating the crisis between Ukraine and Russia, and therefore, I mean, if we have got military action within Ukraine in the coming days, well, this will definitely have a negative effect on the DAX too, causing it to plunge. I mean, I can basically see this as being the trigger of the DAX going down. So that's about it for the DAX now. There is another thing I want to mention. I mean, a lot of people are trading the IBEX. Nevertheless, I mean, there is shall we say, a fundamental analysis or news that could be coming out this weekend that will affect the DAX. I mean, a lot of people will know the situation about Catalonia. Now, I mean, Catalonia being an autonomic region of Spain, they've been wanting their independence for quite some time, just like Scotland. They've been wanting to organise a referendum with the date of the 9th of November, which is this Sunday, in order to call all the Catalans to the polling stations and to have them vote whether they want to go alone, be independent from Spain, or remain attached or remain part of Spain as they are now. Now, Madrid has deemed this referendum illegal. They went to the Constitutional Court. It's been classed as unconstitutional, and therefore this referendum was cancelled by Madrid. Now, Artur Mas, which is the president of the Generalitat of Catalonia, is insisting on carrying it out. He's changed the name from a referendum to consultation, but nevertheless, Madrid is saying that they're not having it. They don't want them to hold it, and therefore have advised them that it would be illegal and anti-constitutional for them to do it. Now, how has Catalonia responded? Well, basically, they're defying Spain. They're still saying that they are going to hold this session vote. Now, if we read the news, the mainstream media is reporting that Spain is sending in some extra police forces from the Guardia Civil. Now, I mean, I live in Catalonia, therefore, I mean, I can have a kind of an outsee of what's going on. And today, I can actually show you a picture that was taken. This picture was taken on the motorway just outside Barcelona, and as you can see, it doesn't actually look like the police are here. This looks more like a military intervention. It could just be precautionary in anticipation of what could happen on Sunday. Now, whatever happens, I can guarantee that it will affect the market. If there is some kind of civil unrest in Catalonia, then expect the DAX to be affected strongly on opening on Monday. Well, we'll have to see where this takes us. So all the fundamentals are against the DAX too. It's very unlikely that the DAX would rally when there's so many civil unrest and implosions within the EU zone. So, well, a lot of information for you. I mean, this report has lasted quite some time. If you're still here, then great. I hope I didn't bore you. But as such, I'm pretty sure that you've got a clearer insight now as to what to expect from the DAX and from the indices within the EU zone. Well, that's about it for now. If you have any questions, once again, well, please do not hesitate to contact me on my eToro wall, dHtrader.com. You can also contact us on our website, dHtrader.com, or on our Facebook page. Well, thank you very much, and good evening to you all.